Hey everybody, I'm Sean Ryan, partner and co-founder of R2 Accounting, and this is R2 Cents. On R2 Cents, the purpose is to get information and experiences out to small and medium-sized business owners that we've seen, and we'll also tap into some of those information and experiences that our customers and peers have seen as well. If you find this helpful, please like and subscribe below, and feel free to leave comments in the comments section as well. With that said, let's get started. Okay everybody. Today we're going to dive into part 2 of our 4-part series on understanding the financial health of your business. Last time we talked about the importance of quality bookkeeping, which is pillar number 1. And when you're through with this session, I urge you to go back and check that one out if you already haven't seen it. Today we're going to talk about the importance of operational and financial results analysis. Now, most larger companies are already doing this regularly, but today I want to talk about why it's so important for small and medium-sized companies to be doing this as well. So the first benefit of results analysis is probably the most obvious, and that's understanding business performance. At the highest level, this just really means looking at our results at month end and saying, are we profitable or not? Do we have more revenue than we have expenses? Taking it a step further, it's great to know if you have profit in 1 month, but it's really more important to learn about the trends. And that means doing it more than just in the current month. It's going back for a number of months. I would say I usually do it on a year-to-date basis. So if the fiscal year of your company is January to December, let's say we're in August, you should be looking at month-end results, January to August, all at one time. Really trying to determine, did profits go up? Did they go down? Where are they sitting? If you're looking at these number of months and you see that you've got losses in every single month, that's obviously an issue that should get addressed absolutely immediately. But if you do have profits, it's actually going to serve as a baseline for how do we get better. In order to know where you're trying to get to, you really need to know where you've been, and doing this type of trend analysis is the only way to really get there. So building on the last point of understanding business performance, the next thing we want to talk about is understanding what drives business performance. And here I'm not talking about the high-level profit and loss analysis that we just discussed. I'm really getting into the granular details of what's going to drive profit. Understanding our product and services in and out. What are we offering? What price can we offer them for? Understanding the market, what will it bear? Next, cost analysis. What systems and staff do we need to put in place in order for this business to be successful? And what levers can we pull to move some of that around, and how will it impact cash flows? Taking it a step further, maybe we have multiple products and services and we offer those in different geographical regions throughout the world. If that's the case, you could be looking at business segments rolling up into a larger pie. When you have business segments, you really should be looking at each of them independently, but doing that same analysis. What is the profit that each of these business segments is generating? What are the products that they're offering? Really understanding those granular details and understanding how changing one will impact the segment, but the business as a whole as well. It's really going to allow you to make targeted decisions that are going to have large, impactful change for the company as a whole, as opposed to just making large-scale decisions that may or may not work. When you start to do this over a period of time, you're going to find that a lot of things are going to become very intuitive. Imagine knowing off the top of your head what expenses should be for every month. What is our burn rate? What's our expenses? Or even our profit, just knowing exactly what's reasonable and what might not be. It's really going to help you get a handle on things. It's really going to let you understand the granularity of your business and allow you to make changes that are going to be very impactful. So up to now, we've been talking about the benefits of doing this results analysis, and we've mainly been talking about it in terms of operations. And now we're going to switch gears and talk about another benefit, which is understanding your current financial condition. And in addition to the income statement, the analysis we're going to do here is largely driven by balance sheet items. So this whole thing is about understanding the financial health of your business, and really this drives home at any point in time, what resources do I have? And how can I deploy them to grow this business? So as an example, things I might be looking at are, do I have enough cash and short-term receivables to pay off any short-term debts? Maybe I have a long-term debt outstanding. Do I have enough cash flow regularly in order to pay off that loan when it's due. There's ratios that you commonly hear that you can calculate as well. The current ratio, debt to equity, many of them tell you different things. As an example, we'll stick with the long-term debt. If I have long-term debt, one ratio I really like is referred to as debt to cash flow. And how that's calculated is by taking your total debt and dividing it by your cash flows on an annual basis. And what this says is, assuming your operations don't change, how many years is it going to take me to pay off my debt? Now, if I have a loan that's due in 1 year and that ratio is telling me it's going to take me 4 years, that's obviously a red flag. I know that I need to take a look at that. I might need to go to the lender and start renegotiating some terms if possible. Or if I can't, I might need to find external financing from another investor. So understanding some of those ratios and some of those metrics really go hand in hand with understanding the operations of the company. The next benefit I want to talk about is that of measuring internal resource performance. And when I say that, I'm really referring to the people, processes, and systems that we put in place to drive the success of the business. It's the responsibility of the business owner to really surround themselves with the team that's going to be effective, but it's also their responsibility to make sure they have those tools to be effective as well. And how do we do that? Well, for staff, it's really about getting them involved. Sitting down and making sure everyone on the team knows and agrees on what their goals are and how they're going to achieve those goals. The great thing is when you go to do your monthly operational analysis, whether it be for the company as a whole or a division, looking at those results and being able to have an open dialogue with whoever's responsible for the business unit on, we performed better this month. Why was that? Or maybe we're a little bit worse. Did something happen? Getting that feedback from them is going to allow you to dive into where changes might need to be made. It might be a staffing change, or maybe it is a process or systems change. Maybe you're using an outdated system and the staff could just be more effective using something different. If you don't ask these questions and have that open dialogue, you won't be able to get the result that you want. And this actually trickles down to when it comes time to make change. Because you're in the granular details, you're able to make targeted changes that have the potential to have a really big impact. The last benefit I want to talk about today is enhancing management credibility. Now, I know this is a benefit of the importance of quality bookkeeping, and we did discuss it there, but I do think it's actually even more important in this context. When you are looking at your operational and financial results on a monthly basis, you are inherently doing a check on the accuracy and the quality of the data. You're going to start to get an inherent feel for what is normal in terms of costs or revenue, what trends do I kind of expect to see, and when those expectations are off, you're going to start to dig into those numbers and say, is there something wrong here? Did we make a mistake, or was there just something that happened in the month that we haven't seen before? When you're doing that every month, you're effectively taking a proactive approach to checking your data. Imagine getting into December, it's the end of the year, and looking back at a whole year and finding an issue in February and trying to remember in February what you had done that resulted in the issue. It's going to save you a ton of time at year end, and that includes if you're getting an audit done or maybe you're just getting your taxes filed, but also in that due diligence process that we talked about. If you've got a potential loan that you're trying to go after, or maybe an investor coming in, having those books intact on a regular basis and doing that analysis, it not only does speak to the integrity of the data, but it also is just good practice. They're going to see that you have a high expectation for quality and good practice in everything that you do, and that's going to give you the benefit of the doubt. So to finish off, we'll ask ourselves the question, when is the right time to start doing operational and financial results analysis? And of course, the answer is now. Imagine you're nearing the end of your fiscal year. You're in October, and you do a 10-month operational analysis from January to October, and you see that you've actually had net losses in every single month. Wouldn't you have rather started earlier and realize that trend in February and give yourself time to make changes to show more preferable results later on? The last thing I want to leave you with is this. Increased profits is not a direct benefit of results analysis, but having a profound understanding of your business is. It's up to you as a business owner or management to take that understanding and knowledge and turn it into actionable, targeted change that's going to yield better results in the future. It's really up to you and what you choose to do with it. And it might sound difficult, but it's really not. If you need help getting started, this is what we do. Please reach out to us. Okay, everybody, thanks for watching. If you found this useful today, please leave a comment in the comment section below, and also feel free to like and subscribe to get updates for future content. If you want to get a hold of us directly, you can do that at info@r2accounting.com, or feel free to head over to our website, r2accounting.com. Again, I'm Sean Ryan. Thanks for watching R2 Cents with R2 Accounting.